Maverick traders. Welcome out to your market roundup for March 13th. Corey here with you. We always take a top-down approach to the markets, look at what meaningful news is out there. We're going to talk about the EV space specifically. We'll go through sector analysis, and then we'll break down some highlight ideas, bullish, bearish, neutral, the way we see it, and the best risk-reward probability mix we can find.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
There wasn't a whole lot happening today in terms of equity price movement. As you can see, Dow, S&P, NASDAQ, all around unchanged. Of course, the NASDAQ underperformed, down 0.5%. Russell up about 0.5%. But where there was movement was in the commodity space. Oil with a big up day, up over 2.3%, and gold up almost 1% as well. That followed yesterday, where gold and silver took a little bit of a step back. They recovered that back today. Daily news, Tesla downgraded again as EVs struggle. And the House has now passed a TikTok ban bill. It goes to the Senate, where it's not expected to pass, but it's not out of the question. And then the question marks become, well, will there be tit for tat? Because if we start banning things from China, China may ban others. And this is more of the follow-on selling that you're seeing on Tesla, because Tesla runs operations in China. Well, what if all of a sudden, again, there are bans and things like that? Well, it could hurt U.S. corporations as well. Advanced decline line about half and half, and the 50-day moving average still bullish, about 2/3 of stocks in an upward trend. Now, as you look at the S&P, an interesting reversal that happened a few days ago that I expect will be significant down the road, that we'll look back on this as kind of a turning point. Well, that hasn't happened yet. In fact, we've recovered back what we lost there. Is this still part of the topping out process, or am I dead wrong and this market's just going to continue to grind and charge higher? Right now, it's defying expectations here. It's running up through bearish divergences and things like that in the indicator. So there is an underlying bid here that has just gone beyond how normal price action behaves, but that doesn't mean it can't continue. Rules are made to be broken, I suppose. The NASDAQ shows a little more weakness. You can see the same reversal, but we're still well below that high. And then even today, a bearish Harami formation. I suspect the NASDAQ rolls over, and if the NASDAQ goes, so goes the S&P in all likelihood. So I still think we're in that little topping out phase. We shall see. As we look at the heat map, as we said, Tesla with the big downgrade, and semiconductors took it on the chin today. You can see Broadcom, AMD, Intel, the whole lot deeply in the red. More green and energy, as you'd expect, with oil up about 2.5%. Market outlook for me is more on the sideways variety for this week, and that's not a bad call given the markets have just flattened out. I'm expecting a little bit more rollover. I'm expecting that in the next couple of weeks it would be more of a -1, -2 type of expectation, but we shall see. We'll cross that bridge when we get there. For now, it's just a little bit more cautious, a little bit more neutral on markets. Now, we've got some bulls and we've got some bear ideas. Let's go look at a few charts. First, on the bullish side, I've got Palantir here. You can see the gap up on heavy volume, the pullback on lighter volume, and we're basically back to where we gapped up to on this little gap. Ideally, you keep this gap open and proceed to start to pivot higher. So old breakout point, kind of old resistance, we sink into support and then bounce. And I always say that support and resistance often acts like a trampoline of sorts, in that when you hit a trampoline, you don't just immediately bounce. The trampoline sinks down and then springs higher. So you'll often sink into old resistance zones like this, sink in below it, and then spring higher. And that throws a lot of people off in that they expected it to just be like concrete, never go below that. Usually you'll just kind of break into it and then spring up and through. On the bearish side, I like Biogen. Biogen is deep downtrend. You can see the breakdown here. You can see that the moving averages are sloping downward. Little bearish reversal here after a correction back up. And while not mega bearish, an anticipation back towards this 215, this lower end support, seems likely to my eye. Also on the bearish list, a stock like Bumble, you've got breakdowns out of, you know, consolidations here for a couple of weeks, and then we gap and break down. We're in continuation mode, and for the foreseeable future, it looks like it will continue to just trade and grind a little lower. Markets, I believe, are in this kind of blow off top phase, which means we don't necessarily go down aggressively. We may consolidate. We may go sideways for a while. I've just basically been on record as saying I don't think we can keep up the same pace we've been moving at. And I would expect a corrective phase, whether that corrects sideways or whether that corrects to the downside. I think we're going into that corrective phase. Tomorrow we've got retail sales, and then we've also got a few earnings. We've got Adobe after the bell tomorrow, Dollar General, and Dollar Tree got hammered. So if the dollar stores trade together, DG may trade down. It may have already traded down in sympathy. Dick's stores, Ulta, still to report this week. Hope you enjoyed the market roundup. Have a great week. We'll see you next time.